Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for Monday, the 30th of October, 2017, just after 3 p.m. Central Daylight Time. Well, there's a lot to digest, and the metal markets are trying to. We've got the new indictments by the special prosecutor. We now know it's Robert Gates and Paul Manafort. We know that their bails were set, bonds, you should say, way high, $10 million and I think $8.5 million. We've seen the Catalan government, quietly go bye-bye, and now Spain is very gradually taking control. Of course, the special office, what they call their prosecutor office, has gone after the Catalan leaders. Parliament will be thrown out. Snap elections, December 1st. The head of the police force gone. And so far, no rioting in the streets. That's the great news. Where does this all go? My guess is another day for independence down the road. This goes away very quickly. That's my own take on it. And in looking at the markets, you can see the stock market settling back a little bit. And why? Because it's a fairy dream to think that tax reform is going to get done this week, or at least the idea of what the bill's going to be, it's going to be passed before Thanksgiving. I wish I was wrong. I think it'd be great for the economy. Unfortunately, I think I'm right. Too many lobby groups are going to be going after this. People are going to say from both sides of the party, how's it paying for itself? I'm not sure it has to pay for itself. You know, infrastructure doesn't necessarily pay for itself either. But you get the monies back, better roads, better rail, transportation moves, economies grow. Those are the things we're looking at. The bigger event that I think affected gold and got it and the other metals up is, simply put, they probably fell too much last week as the dollar lifted its head. Now that the dollar's in a bit of a corrective move and you've gotten the euro and the other currencies getting a little rally, it's time to correct some of that. That's what I think is more realistic than anything. When I go to a weekly area chart of closes, I won't change from what I said. You've got now a pattern of lower high closes, lower low closes. You'd have to get back over this 1303 area, let's call it on a closing basis, for me to rethink my idea. I'm looking for resistance up in the 18-week average of closes of the 1280-60 level. When we come to a daily area chart of closes, I didn't bother with the moving average on this. I could put it on, but I just wanted you to see the thrust from the high to the low, and you're still very much in that. Now, as we get onto a daily bar chart of just price action of the December gold, we get a picture here that when you put the swing line on, you see you've got lower highs, lower lows. You could negate that by just taking out 1280, 380, and you'd be out of a downtrend. You wouldn't be in an uptrend. You'd have then a lower low and a higher high. What else? When we put the key moving averages on, we see 1280.40, the 100-day average, up to 1284.20. Now, the one thing you know is you're going to get different moving averages tomorrow. So if I step back a day to just see how much they're both falling, you on Friday were at the same number on your 18-day average as you are today, which is fairly fascinating when I look at that. I would expect the market tries to drop a fraction of that tonight. So I still say my 1283 area is going to be a zone of resistance on the chart. In terms of downside targets, you just missed it. You got down to 1260, if you take a look at this, 1263.80 on Friday. I said you just missed it. You didn't miss it. You hit the lower Bollinger Band. It was 1264.30, and you came right on back up. So this is still a very valid area for resistance as I'm defining it. When I look at momentum, the market got oversold, so getting a bit of a bounce here to get out of that makes total sense. Again, when you hit a Bollinger Band first time, be it to the upside or downside, my theory That's all it is. I wish I could prove it's more to you. My theory is that that's where the pros take some money off the table. And how do you get to the upper band? Well, if you have upside bias, you're thinking bullish. If you're under the 18-day average, you have bearish bias. So you're thinking that's where the support is. Doesn't mean it can't go lower or it can't go higher. But that's where I think the pros are taking their first monies off the table. When I look at momentum on GLD, it too is oversold, very much in a downtrend, lower highs, lower lows, back into a resistance area, found its support last week, very close to its lower Bollinger Band. And the gold miners are still all the way, still very bearish here. They've got a little different story too, just plain oversold, right? But they have room here to get back into these two averages between 2301 and 2328, and a lot of room up to 2358. So again, I think that this is a bounce, not a change of direction in the metals. When we go to the gold-silver ratio, it went from 74.76 up to where you needed 75.2 ounces of silver to get an ounce of gold as of Friday. You've slipped back a little. That means the higher this number goes, the stronger gold is in relation to silver. You need more ounces of silver. The lower the number, you need less ounces of silver. It means it's increasing in value relative to gold. So you'll know, people have asked me, is this a normal number? It's a high number on a historic basis. When we go to the silver chart, here too, an oversold condition, lower highs, lower lows. All you've done is come back to the 18-day and the 100-day average of closes. You haven't hit the 18 yet. You've hit the 100 today, and that's where I'm seeing resistance. In the copper market, a big story is what's China doing about the clean air and how it's going to affect copper smelting and the like. That, I think, is going to be very important. I heard that there's I read actually over the weekend, all the substantial excess amount of iron ore that's in the country right now, sitting on docks. A lot of it has to do with President Xi's idea of clean air and what they have to do to clean up everything. Is that bullish or bearish? Well, I still say they'll use those products, and everything I've seen, I'm not seeing anything that says that the president's reforms want to slow down their economy. So we'll see if this is just a correction. When you come to the platinum market, you went down. You hit the area of oversold. You have a pattern of lower highs, lower lows, but you haven't been able in the longest period of time to hit the upper or lower Bollinger Band. You got to go back to mid-September. So this market's caught more or less in sideways action against that 18-day average and staying within the Bollinger Bands. It means more or less just a sideways market. While you've been in a bit of an attempt at an uptrend trend in palladium, but it can lose that very quickly. Should this market get under 949 and we see the 18-day average jump tonight, be careful. You could get a pattern of lower highs, lower lows in this market, or can you? You tell me. You should be able to say, no, you can't, Ira. Take a look. 961 high, then you pulled back. Today you go up and you make a higher high. It doesn't look like it. You always got to look at your chart and be certain of what your numbers are. The most you can have here is a higher high and a lower low if that occurred. Bullish side happens if you don't take out 949, you have a pattern of higher lows, higher highs already, and upside bias. Got to pay close attention. In the dollar index, are you surprised at all that after two closes over an upper Bollinger Band, you're getting a bit of a pullback? If you are, study Bollinger Bands. That's not how they operate. 95% of the time, you close within them. I have a rule of thumb, and that's all that it is, that when you get successive closes, count each day as one of those percentage points. So I viewed it as a 3% chance today of the market staying over the upper Bollinger Band. It's pulling back. It's not a change of trend. Nothing's changed there. You still have a pattern where you've got big-time support at 93.70 to 93.55, and you might even get a bullish crossover where the 18-day gets over the 100. Admittedly, the market's overbought. We had the biggest drop in the euro currency in 1 week, I think, of the year. So I pay attention to all that and try to put things together for you where you can come together with game plans. That's our idea. Plus, we measure where a market might or might not go with what we call our price counts. And during the week, every day, in our charting service, our firm publishes what they call the chart of the day. They'll give you an idea of where a market might be headed. Understand that a price count is an after-the-fact tool. It doesn't say the market is now going to break out. It says the market has broken out into an upside or a downside. If the market lifts, if it's in an upside, here are possible objectives to the upside. Here's possible to the downside. They have high percentage of being hit, especially the first counts. Then they start falling off from there. But to find out about all this, it's really simple. We offer 2 PDFs, free, videos on how you plot it, and charting software. Call us, go to our website, sign up for your chart of the day, and so on. You can click right up here if you're watching me on YouTube, or underneath us on many websites it says, click here for Ira's free information. Do so. Let us put this in your hands. I'm Ira Epstein. You have a good day, and I'll speak with you later.